Alright, hello people. Now, I've tried to make this video 3 times and it keeps ending up being long. It's probably going to be long this time. I'm going to try to keep it short, but basically I'm going to try to reteach what I've been already getting at and try to do it better, okay? And so what are we going to talk about today? We're going to talk about how to understand higher time frame bias from a non-technical perspective, okay? So, how do you understand higher time frame bias from a fundamental perspective? Okay, what is true fundamentals? Well, if you've seen my previous videos, the basic concept behind my theory for the markets is that yes, technical trading is good. There's patterns in trading, and I did talk about ways to get better at trading technically. Okay, but there is something that supersedes that, which is fundamentals. But the fundamentals are not the normal type of fundamentals that you think they are. Yes, earning plays, stuff like that do work in the proper type of market. Okay, so good earnings can pump up a stock, and if you play it with good technicals, you can make money off of earning plays. Okay, look into Qullamagie, Qullamagie, if you want to know how to do earnings plays, swing trading. Okay. However, how do you know when those are going to work? When you're in a bull market versus a bear market? Well, again, there are some technical methods to establish that. I've talked about Michael S. Jenkins before and how he has a 2,339-day cycle that has ruled the market for quite some time. And the last iteration of it was December 25th, 2021. So that was the end of the bull market. Okay. Now, I found out about that early into last year, probably around here, and I was still not that good at trading at that point, and so I didn't put a lot of skin in the game, but I watched what happened over the next year, and knowing that a bear market was triggered by that cycle for whatever reason, I was able to, while having a strong bias toward the short side, I was able to learn how the market is manipulated and what the signals are for the manipulation of the market. And it opened my eyes to a lot of stuff just by me paying attention. So although I learned some methods from other people, the method I'm going to teach you now is something that I've pretty much figured out on my own for the most part, just by taking hints and pieces from other people and running with it to a degree that they aren't aware of. And yeah, basically I'm going to explain some big picture stuff that isn't necessarily directly salient. It affects the market, but it's a much broader thing too, but beyond just the market. Okay, so we're going to talk about that first, and then I'm going to talk about how it ties into the markets and how you can apply the concept in order to understand, basically predict when the market's going to turn. Okay, so anyway, I had a feeling that the market was going to be bearish based on that. Now, I will admit, last year they did a lot of this stuff, so this was not an easy crash to trade because they kept running back up, taking out buy stops and then running it lower, right? Most recessions do not happen like this, where they keep running price this high. Usually it sells off a lot harder and then it recovers. But what they did here was they just did a different type of recession where it kind of sells off, buys up, sells off, buys up, sells off, buys up. So it was sort of a slightly more range-bound type of recession. Anyway, how did I know that it was going to end here? Well, let's go. Okay, so first off, the market is a zero-sum game. Okay, money in itself is a zero-sum game. That means that if you lose a trade in this market, somebody else makes the money that you lost, right? Or other people make it, right? It goes into the market, it comes out of you, and somebody else is going to win that money out of the market, correct? That's how it works. It's a zero-sum game. Whatever it goes in comes out. If you lose something, it comes out into someone else's account, okay? Essentially. So, what is the... how do we prove that this is a zero-sum game, and what is the ultimate version of this zero-sum game? What is the overarching force that is implementing this zero-sum game? Well, it's the Treasury and the Federal Reserve. Okay, and how do you know that there's a zero-sum game? Well, look at the U.S. national debt clock. Okay, the Treasury has printed this much money, or they don't print all of it. It's so a lot of it electronically exists, but they've created currency. It's not money, it's currency, because it's not backed by gold anymore, meaning that it's kind of monopoly money in a sense. They can just keep printing more of it. Debt ceilings don't matter. No matter what happens, they will always inevitably end up raising the debt ceiling. The debt ceiling is imaginary. They create debt so that they can create currency. Okay, so they create currency, they create debt. That's a zero sum. That's zero sum in itself. The currency that exists has an equal amount of debt that exists. The thing is that the government never plans on paying off this debt. Okay, so they created all this money and they created debt, but they're never going to pay off the debt. So they basically made money out of thin air, or currency out of thin air, and they use that in order to enact a strategic game plan that deliberately makes the world the way it is, okay, monetarily. So because it's not backed by gold, it's doomed to inflate to infinity, asymptotically. The value of the dollar will depreciate asymptotically, always approaching zero, never reaching it, but getting closer and closer. And the dollars themselves will continue inflating as long as they continue to print more dollars. Each dollar it depreciates, and it inflates, right? So why do they do this? Do they do this because this is some sort of problematic system that's snowballed way beyond their control, and there's nothing that they can do to stop it but just continue it? Well, I don't think so. To me, that's kind of the result, but really this is completely the way that our debt is, this country's debt is working, and all countries' debt, and the central bank's debt, and this whole system is functioning exactly as it was intended to function. If it wasn't, they would change it. Correct? Okay, if they have the power to implement these massive governments and do all the things that the American government and the people who own the American government and all that, if they have enough power to do that, if there was something that was functioning not as they wanted it to, they would change it. Okay, so anyway, they print dollars, they inflate the dollar. Now, what does this accomplish? Well, first off, they lend out the dollars at interest. They lend it out. Well, they create stimulus for the American people during recessions, but more importantly, the IMF, World Bank Group, lends this money created out of thin air, this currency, to other countries that are less prosperous, second and third world countries. And what happens is that the IMF, World Bank Group, lends it out to these other countries, promising them that it will help them to prosper, all the while knowing that those countries will never be able to pay off that debt. So the countries will pay interest on them until eventually they go broke. And this massive, as dollars inflate, it affects the whole world. So everything around all the currencies of all the countries around the world are doomed to inflate now, and they are ruled by the dollar. So what is this? Have you guys heard of loan sharking? Loan sharking is where you loan something to somebody at an exorbitant interest rate, knowing that that eventually you will take everything from them. They will keep paying you the payments until you cannot pay the payments anymore, and then they will start to repo your assets, or, well, not repo, but they'll take other things. They'll take everything they can from you until you have nothing left. Okay, so basically, once you've loan sharked to somebody, you have them by the balls, right? So you loan out to somebody knowing they won't pay it back, and you keep taking from them, and they don't realize it until it's too late, that you're just the only reason you loaned to them in the first place was so that you would have complete control over them. You take everything till they have nothing left. Then when they have nothing left, then you own them. Okay, and so they basically become your indentured servant, and then you can make them do whatever you want. They could put out a hit for you, they could commit crimes for you, anyway, that kind of thing. That's loan sharking. But what this is basically loan sharking on the most massive scale ever. Okay, and but the way that their loan sharking works is that once that country defaults, the IMF and the Treasury will print more money to loan to them so that they continue paying interest on the previous loans, and they'll tax the American taxpayer on top of for at least part of it to make it happen. And again, so you see how it's a super massive black hole. Like it's all the debt. This itself will suck everything in, okay, until there's nothing left, okay. And but the people who control this system are the ones who make the difference in wealth. Now, again, as I've said this in previous videos, as the dollar inflates and its value depreciates, everyone who holds their wealth in cash or something that's cash tied to cash, that means their wealth depreciates, right? But it's a zero-sum game. So wealth is a constant. It cannot be created nor destroyed. Currency can be created. The more currency that is created, the less it is worth. So you hold your assets in currency or something like that, and then as it inflates, your net worth goes down. However, someone else who has their assets or has their wealth in assets that are inversely correlated with the depreciating dollar, their assets appreciate as the purchasing power of the dollar depreciates, correct? Okay, so that's what's happening. They're siphoning wealth by making other people's assets worth less in a zero-sum game. Again, it has to balance out. So your assets depreciate, the inversely correlated assets appreciate. That's a transfer. It transfers the wealth. Okay, and so this is how they keep. But then, so again, even if you make the right play, though, the IRS still gets you because they have to tax you. So again, it's kind of a lose-lose. But if you at least make the right financial play, then hopefully the worst you have to pay is a 34% capital gains tax because you're so dang rich that, that sucks. But at least you're rich enough to be able to afford that tax. But anyway, again, think about that. Even if you are massively successful, what happens? You have to pay a massive capital gains tax. So they screw you either way. But so you see how you're swimming upstream in this situation? Okay, anyway. So how do the people that own the United States government ensure that they make money, and I'm talking about also the people that connected, so like the big banks like JP Morgan, whoever, Wells Fargo, Morgan Stanley, Goldman Sachs, all the big banks that are profit houses, right? How do they ensure that they make money? Well, because the market's a zero-sum game, and if you look at a bank's track record, they make year over year, they make profit every year. They make billions of dollars. Okay, those billions of dollars don't come out of thin air. They come from losing trades and bad investments. Correct? It's a zero-sum game. So that has to, in order for the banks to turn those billions of dollars in profit, they have to take billions of dollars from other people. Now, those people will have to be less informed. They will have to be informed incorrectly in order to make a bad investment so that the banks can take the difference in money from them from the price that the person paid for that investment, and then the return that person gets on that investment. If they get a negative return, the big banks make the difference on that investment, correct? Okay, so recessions are engineered ahead of time by the Treasury, Federal Reserve, swap dealer banks, and everyone else part of that system who engineers it in order to have the market go in a certain direction that is going to take money from losing traders and give it to banks. Okay, and it's not just recessions that are engineered. Every market movement is engineered. But if you think about the market basically in bull and bear markets, that's kind of like the general gist of how it works. And so when a recession begins to happen, which you can predict mathematically, but also you can predict using other things like the news and public opinion, they engineer it at that time because they have predetermined that that is the point in price where if they begin to drive the market down, they know that there's enough dopes who bought at too high of a price, too high of a premium, that as they drive them down, they will put those people's position into drawdown. And then, just when the recession is ending, it's nearing its end, they will do the flip side. So the people who bought up here are going to be, they can't take the pain anymore, and they're going to sell here or here, right, at a loss. And then what's going to happen? Then they're going to flip the market right around again, and it's going to go back up. And the same people who liquidated their losing positions from here would be break even here. But so how do they make this happen? Okay, because they can't force people to take bad trades, but everyone, because they're desperate to make money, because their assets, their wealth is depreciating because of this whole system, people are desperate, and so they look for ways, avenues to make more money, and so they get into investing and looking to invest money in asset classes, especially stock markets and stuff like that. So how do they, so people are desperate, people need to make money, so how do they get people to start trading? Well, there's a couple methods, okay, but it even boils down to, think about this. What's one of the biggest companies out there? Google. Okay, what is one of Google's biggest products? YouTube. Let me guess. You're here, well, first off, this is a YouTube video, but you're here because you found out about trading on YouTube. Okay, do you think it's a coincidence that on one of the biggest company in the world's platforms, trading has just decided to blow up as a niche? Think about it. Do you think that's a coincidence? Okay, so everyone finding out about trading on YouTube, all these uninformed retail investors learning all these strategies from other slightly more informed retail investors who most of their information is completely bad. Think about how much more money that brings into the market that could be potentially losing trades that the banks can make money off of, right? The more people they bring into the market, the more people lose money, or the more money they make. The more people they bring in, the more money they make that's lost from those retail traders that are noobs, right? Okay, so how do they do this? How do they get the people to lose the trades? Well, banks are connected to news media. How do you know that? Look at paid partner content. Okay, so let's say I'm just picking CNN. Okay. Oh, crap. No, I just lost the ad. Crap. Wait. Just gonna have to load. Okay, the same ad. Good. Okay, so let's say that you are an uninformed investor. Now, okay, this has to do with human psychology. We are born as infants and children, and a lot of our childlike behaviors actually do stay with us throughout life. What am I talking about? Well, we're needy. And when we're unsure of something, what did we do when we were kids? We ran crying to mommy and daddy. And so what happens when we're unsure of something? Now, we look to somebody who we want to trust as our authority, someone who we believe knows more about the thing than we do, so that they can help us to succeed, right? Banks take complete advantage of that emotional and psychological aspect of humans. So someone who gets into this to investing, oh, obviously, I mean, and it's not even just that, but it's just the fact that you don't know anything. So what do you have to do? You have to look, you hear that people make money out of the stock market, so you look to see, well, how do I find out about how to trade? And then you start learning all that. But then you also look like, what's the right opinions? Where should I be placing my bets? And so what do people do? They look to like places like CNBC, CNN, MarketWatch, Business Insider, whoever, Bloomberg, okay? Yahoo Finance. Now, think about this. The same banks that make profit from losing traders are paying these news media outlets to feature their articles and their ads on here, right? So articles and advertisements, right? Right here. So the same dumb, uninformed retail investor, I don't mean intellectually dumb, just people who are, you know what I mean, they're green, right? They're a greenhorn at trading. They come here, and then this stuff's being pushed in their face. These same banks that make money from losing trades are here advertising to those losing traders. Okay, are you starting to see what's going on here? Okay, think about this too. JP Morgan had to invest money to put this article up, to host this web page, that if we click on it, to host the web page, or if it was an article like from, I don't know, Charles Schwab, whoever, Citigold, Cash Offer, these people, it costs money to, first of all, to pay CNN to put this up, but also to employ somebody to write the article or to set up the web page, yada yada, right? These banks are profit driven. Would they put money into this advertisement if they did not believe that they would generate a positive return on interest? The whole bank is built upon getting a positive return on their investment. So if they invest money into an advertisement, that means they're expecting to make more out of this ad than they're paying to put the ad out, correct? Otherwise, if that wasn't the case, they wouldn't have a profitable business model. This bank would not exist. They would go under, correct, in the long run. So they have to, everything that JP Morgan does has to be profit driven in order for them to continue growing and making more profit, correct? And their track record is complete indication that that's what they're doing, right? Okay, so that means that this advertisement right here is designed to, I know you could say, I'm going to disclaim, I know you could say, well, it's because that the people who work at JP Morgan want to make commissions on their like closing deals with customers, right? By collecting a fee from their clients, stuff like that. Yes, okay, there is that, but I believe there's a much larger game at play here because JP Morgan, while they do make money and generate revenue from commissions and stuff from clients and the fees they charge, yes, where is JP Morgan making the real money? Well, you know they trade, right? They're trading Apple. Who moves Apple? JP Morgan. Okay, so let's think about that. Why does JP Morgan really put this advertisement out? Well, let's see about this. Around October of last year, October through December, and since then, they've been promoting, all the banks have been promoting high-yield savings accounts through subsidiary banks that sweep the cash to the big program banks like Goldman Sachs or Wells Fargo, JP Morgan, depending on who you're with. But basically, these banks have been promoting high-yield savings accounts since the very end of the bear market. They've been promoting to get out of stocks, essentially. They're not telling you to get out of stocks, but there's articles telling you to get out of stocks. But they're promoting basically cash, betting on interest on your dollars as a method or means of collecting interest. As they're saying, basically that's the smartest investment right now. Yet right as they begin to promote that as a smart investment, what happens? Tech stocks start ripping. So everyone retail investors or people in hedge funds like Cathie Wood's hedge funds, that type of thing, or people who have Vanguard or whatever, and they have a financial advisor managing their 401k or their Roth IRA or their pension fund or whatever. Again, I don't know like all the nuances of those types of funds because I don't have a fund, right? I've never been in like a trust fund or whatever. But anyway, people managing things like trust funds, right? The financial advisors, they didn't take profits here. They are trained, and it's not their fault, but they're just trained to do this by people who it is their fault. They're trained to keep holding at the peak of a bull market, and then they're trained to panic when there's a lot of drawdown on the accounts, and then so they liquidate the accounts because they think here that it's at risk of dropping another 25 to 50% or whatever, another 20% as like the quote-unquote analysts say, who are bought out by these banks. So they sell for a loss, and then the market starts ripping again, right? So the advisors will sell for a loss. People like your mom and dad or your grandparents' trust fund or whatever, or their whatever fund or their 401k for a loss, right? And then they'll move into the dollar, and they'll move into the dollar right as these tech stocks start ripping again, right? So as you can see, there's a zero-sum game at play there. The banks are making the difference between the financial advisor or whoever, or Cathie Wood, selling it for a loss. The difference is made by the banks, and then as soon as the banks start getting all these people out of stocks, like the tech stocks, FANG or whatever, then they have permission to start, or then they can make a good profit by moving price up again, and then they don't have to pay out all those retail traders for having a break even or a profitable position, correct? They make the difference as it loses, and then the people they get into cash, and then they can move stocks up again, and they don't have to share a piece of the pie with anyone, right? You see what I'm saying? So when you see here that like, this isn't the same web page. Dang it. This isn't. Okay, but basically, man, I have to find it. Wait, I have it in my history. Don't worry. This one. Right? Yes. Okay. This was so it's not the same. It's Okay, it was a different article. But so this is the one that was last on CNN. It was this one before when I made the video last. But anyway, this one's going to be more concise. Look at this. What is the narrative that this bank who needs losing trades, what are they putting out? You can find higher yields and better protection against recession and equity declines. What is equity decline? That was an equity is a stock, so they're saying Apple's going to decline, except it's not declining. Okay, but they're saying you can find higher yields and better protection against recession and equity declines in a variety of fixed income strategies in 2023. Again, how blatant is the lie here? Okay, imagine if like a freaking vampire was at your door saying this to you. Would you trust them? Because that's literally what's happening. Okay, so they're telling you, they're literally pushing a narrative saying that stocks are going to crash. Meanwhile, the same big-ass bank that has the power to move price of these equities up, and they're moving it up, and they're telling you it's declining. Anyway, okay, I lost the grammar of my sentence there or whatever, but the same bank that's moving this up is telling you it's going to go down. And then they're telling you to get into high-yield savings or treasury bonds. So what does that sound like to you? To me, this sounds like they're about to dump their treasury bond positions. Okay, so let's look at treasury bonds right now. The T-bills, all right? Oh, look. Wow, they're at a nice premium. Wow, they're as high as they've been in years. Wouldn't it be funny if they just dumped these premium positions off onto unwitting retail investors? Do you see where I'm getting at? Does this make sense to you? Does what I'm saying make sense? Okay, so let me get back on track. I have an outline here for that. Okay, so they pay the news to do the inverse. They need to generate losing trades. I mean, that's all you need to know. You can click away now if you get what I'm saying and you already know what to do about it. But anyway, if you don't believe me, look into like BlackRock or whatever, even on Wikipedia, which is controlled by these organizations. Even there, like some information slips through the cracks. These things have a revolving door with the Fed and the Treasury. So the major financial institutions, like ones like BlackRock and Vanguard, as well as like commercial banks that are swap dealers, they're interconnected. They have a revolving door with the Federal Reserve and the Treasury Department. They all are conspiring to take people's money. The people in power. Think about this. Everyone in this world wants money. You want money, I want money. People who actually are driven enough to get into politics or get into banking or, you know, some sort of investment institution, people who work hard enough to get up high enough in those institutions that have lots of power, they will get into the position of power and they will abuse it to get rich. And the only way to get rich is to take money from other people because wealth is a zero-sum game. Okay, so they're all these things, the banks, the government, the news, they're all in bed with each other conspiring to generate losing trades on the other side of their winning trades. Yes, true, factually true. Nobody has ever really mentioned this, okay? I don't know why I figured it out, but I'm sure there's other people who are aware of it, but nobody wants to talk about it because it's uncomfortable. Now, okay, technically, this can't be completely proven because obviously if it was completely proven, it would defeat the whole effectiveness of this system. But the evidence is pretty much there. Everything I'm talking about, and the more you think about what I'm saying, you're going to see it's true. Okay, it's obvious that this is the only way that the system can work. Okay. And yes, the issue is that we all, to one degree or another, experience a natural cognitive dissonance when it comes to things like conspiracies and stuff, because it's not comfortable to accept that this is a zero-sum game world and people have a financial incentive to lie. People don't like having their happy, fake illusion life ruined by the truth, okay? It's not fun, but the thing is you have to be a truth seeker if you want to survive. Okay, trust me, all the people up here at the top of these places, they know the truth. And they're abusing it for the wrong reasons. But they know the truth. All the people up at the top of these know exactly what I'm saying is true. Okay? And if they heard this, they'd probably be smirking right now, diabolically. But this is true. And so you either believe it and you want to be in the top 9% of traders who make money, or you want to not believe it and be in the 91% of losing traders who lose money. Okay? Look, and again, look at Reddit, look at anything, okay? Look, there's this guy on YouTube. Think about this, okay? I'm going to type, you've probably heard of this guy. Look at this. Prepare for the treasuries to start moving, the markets to start tanking. This guy has been selling fear since the bottom of the recession last year. he also, I remember this guy, like when I was in 2020, he baited me into Neo, and then I did not get a positive return on that back when I was uninformed. Again, I'm not saying this stuff like I'm just some sort of contrarian conspiracy theorist who wants to hate. As somebody who in previous years of my life lost money trading, it wasn't until I figured these things out that I'm telling you now that I started to make money, okay? So please believe me, okay? At least take it with a grain or two of salt. I mean, if you're not going to believe me completely, okay? This is how it works, okay? The market, okay, think about this. There's 600,000 retail investors who are subscribed to him who will do what he says. Some people will have the right opinion on here, of course, but think about the amount of people who are even just like going to be influenced by this title. They're going to buy treasuries and they're going to sell tech stocks. Do you see what I'm talking about? The banks do not want to share profits. They will not share profits with people betting on this. So do the math. As long as retail is believing this, then the markets will continue to go up. Okay? So that's what I'm saying. I'm not saying they can't pull back. There's always pullbacks. If you want to invest like a big money investor, this is how you invest. Once you know the bias is bullish or bearish, depending on the market conditions, what you would do is, if you're trying to get in a good place as this goes up without FOMOing, what you're going to do is you're going to wait for a red day. Okay, after that red day, you are going to buy below the low of that red day. So basically waiting for another red day, or if it opens below it. So let's say you were trying to invest in Apple. And forget that there was a bank panic here. Just look at it from a pure technical perspective. If you want to be a good investor, what you're going to do is you're going to wait for a red day. So here you have a red day. So you'd buy below the low of that day. Okay, so now this is your low point. It's not a red day, but basically you'd be looking to buy below that day's low. So then you get in there. Okay, and again, you don't have to do it every time, but you would basically keep buying below the low of a red day's low or a lower low that's on a green day. So then here you'd buy here. Right? So you'd have more position there. Then you'd be waiting for it to go below there. So then you'd buy more there. You'd buy more there. Right? You'd buy more below this low. You'd buy more below this low. You'd buy more below this low. And you might think, well, yeah, you'd go into a lot of drawdown there, but it's like, it's not that much. And think about if you'd just done that, and that was during a whole bank panic that lasted for like a month, right? So that's like an extreme case during a bull market where you have to keep adding. You don't have to keep adding, but I'm just saying this is a smart strategy. But look, in general, during a bull market, it's going to be a lot easier to make money doing that. So that doesn't really count as a red day, but here's a red day. So you buy below that day. You wait for that red day. You buy below the low of that day. Okay, here's another red day. You buy below the low of that day. Now you have a position here and a position here. Green days come. You can take off some as it goes for you, but you always want to keep some skin in the game if you can, because that's how investors do it. They'll take some off along the way, but they're always going to have a piece moving through the entire bull market. So then you wait for a red day here, and then you buy below the low of that day right there, and then buy below the low of that day right there, and then guess what happens? It would go right in your favor. Okay, do you see what I'm saying? This is a bit high. You might not want to buy below the low of that red day's low, but like maybe below that day of that red day's low. But you could still buy there. You'd still be in a profit on that position anyway. But you see what I'm saying? It's pretty simple technical. That's just a simple strategy, okay? Buying below a previous red bar's low, or if it's a bear market, selling above a previous green bar's high. Anyway, that's how you get pullbacks, right? So, but anyway, all right. So let's just make sure I'm back on track. Yeah. So popular opinions. Again, as long as and I'm in Discords, I'm in Telegram groups, and I'm seeing the same narrative. Like everyone, like so many traders, even the ones that think they're smart, technical ICT traders or whatever, they're literally waiting for an opportunity to sell the market. The banks will not allow that to happen. There's too many people who think they're smart ICT, smart money concepts traders, waiting for a sell-off, and the people managing those telegrams are literally trying to promote that narrative, the sell narrative. I literally got banned from a Discord within 10 minutes because the moment I joined one, it was one of these meme channels like this guy, but it had way less subscribers. He only had a few hundred. But he was selling these like clickbait videos, and for months, every video that he was putting out, like several a week, would have a thumbnail, and it was like, warning, the crash starting now, warning the crash. And so I was just, that just angered me, because like, there's people who are following that guy into the slaughterhouse. That guy's literally leading people to their own financial destruction. So I joined the Discord, and I was like, he was like, what are you doing? Like, how's your, what positions do you have? And I was like, I'm currently long in tech stocks. I'm long on QQQ, Amazon. I'm probably about to go in pretty hard on Apple. Oh, and by the way, guys, yes, I'm about to go in hard on Apple. So, and then he was like, you should get out. Like, they're about to sell off. And I was like, nah, I'm good. They're doing well, so I'm going to keep holding, or something like that. I can't remember the exact conversation. But he was basically adamant that they were going to sell off. And I was like, yeah, well, to be honest, ever since I started going against the retail opinions, I started making money. And, but he was basically like, my technicals say that it's going to sell off. And I was like, yeah, I know. I'm here to bet against you. And then he instantly kicked me from the Discord. And I know, maybe I came off as a bit like, that comes off kind of rude or whatever, but that guy the guy's videos had no business. He had no business trying to teach trading, okay? He had no clue what he was talking about, and he was just on YouTube to try to get ad revenue from blowing up his channel, right? And it's just like, it's just not right. Like, that guy is actually costing people their money, their hard-earned money, by lying to them. He may not know that he's wrong, but he's been selling a sell narrative for months, and the market keeps going up. And so, like, he can't... I'm pretty sure it's deliberate, okay? Or people are just in such denial. But either way, you can't do that to people. You cannot... I would not make a channel if I wasn't actually having success finally. Okay, I'm not going to be here to try to make a channel. Yeah, of course, it'd be nice to make ad revenue on YouTube, but I'm going to do it by telling the truth. Okay, and if telling the truth doesn't make me ad revenue, then the truth, people hate the truth, okay? But I'm not going to lie. I'm not going to sit here and lie to you guys, okay? Because that's not nice, that's not fair, that's evil, okay? Anyway, sorry for the rant, but I'm here to tell you guys the truth, and that's why you haven't heard it anywhere else, because very few people understand the truth, and that's why so few people make money trading, because they're all following the echo chambers that are in that where the beginning inception point of those beliefs come from the very institutions that are betting against those beliefs. Okay, it's called the Kansas City Shuffle. I was talking about, I've mentioned the Kansas City Shuffle on a few message boards all the time, or a few times, and now I see other people bringing it up, and I think that I started that, maybe not, but someone said they call it that at certain firms. I didn't know that, but I just know I've seen this movie called Lucky Number 11, and it talks about this concept called the Kansas City Shuffle, where basically everyone looks left and you go right, or everyone looks right and you go left. It's basically like a juke. Like you trick somebody. You make everyone look the wrong way, and you go the other way, right? It's a sleight of hand, misdirection. It's like the oldest magician, the oldest concept, or the first concept of becoming a magician is misdirection, right? Well, you need misdirection to make money in a zero-sum game, correct? So, yeah. I don't really have anything else to say, guys. I hope this helps you. I'm sorry that it's long, but this is important stuff, and I can't lay this on you guys quickly. It takes time to talk about this stuff. This is about as quick as I can do it. But yeah, I'll probably make more videos, kind of just reiterating this concept over and over again, hoping the algorithm catches it, so more people can find out about this. Because I really feel bad that so many I've in past years lost money not knowing what I was doing, and there's so many retail traders not knowing what they're doing, and they're partially to blame for risking so much money, but we also don't realize just how difficult trading is, so we don't really know what proper risk is at first anyway. So I just really would hope that people find this channel and believe the truth so that we can start betting with the banks instead of betting against them and losing, because the house always wins. But anyway, yeah, so this is kind of like counting cards, because basically the news, if you do the opposite of it, if you know what to look for, you know when the shoe is rich. Do you know what the shoe is rich means? It's like in blackjack, when you'll get backed off of a casino. I've seen videos where people get backed off, and they'll be like, the pit boss will be like, you're waiting till the shoe's rich, and then you're betting bigger, which means that they're counting cards in blackjack, right? And they're waiting until the count's in the favor of the player, and the player starts betting bigger. Okay, so this is how you know when the shoe is rich. But the casino here can't back you off, right? They really can't, especially if you have a good broker, one of the a Charles Schwab type broker or whatever. Robinhood, zero commissions, and yeah, they're shady, but they can't stop you from entering a position at the right price at the right time, right? I mean, they might try to take a few pennies from it by giving you a slightly worse entry or whatever, but you know what I'm saying. Like I'm right now, my investments are in Robinhood that I've been buying on like Amazon and stuff since like here. So, and there's zero commissions on that. That's why I do Robinhood for long-term position trading. Shouldn't do Robinhood for day trading though, or scalping. But you shouldn't really be scalping, in my opinion. It's a lot harder. Like, you're going to be much happier if you just swing trade on higher time frames. Like, you can watch my other video about how to trade intraday, and I'm just going to tell you right now, even I thought I was profitable doing that, and like I'm getting to that point, but it's just not. It's just so horrible. It's so time consuming to try to trade like that. It is possible, but I would just, if you want to be a fundamental trader, trust me, like what I'm telling you, learn this first and then be a technical trader. Okay? Because you can have like a semi-bad entry, but if your bias is correct, you're still going to make money, right? If your bias is wrong, but you have the best technical entry, you're still going to lose money, right? Even if it's a smaller loss. And, you know, so anyway, I've droned on enough. Thanks for watching, guys. Stay tuned for more. I do have tomorrow or Friday as a top for Apple. So what I believe is it could start selling off this week. And I don't know nobody knows for sure what it's going to do immediately next. But my long-term outlook is still bullish. And so, yeah, I'm probably just going to be looking to buy below low of day on red days. And remember, Apple's got an event coming up, a Worldwide Developers Conference next week. And it's kind of flying under the radar. It's being talked about on some news, but not in financial news. Financial news is not mentioning it. So again, remember the zero-sum game. If there's an event from a big company like Apple and it's kind of flying under the radar with financial publications, I'd be eyeing it if I were you guys. Okay? So, yeah, take care, guys. See you later.